Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange, and you're joining us on Friday, August 27th for another market recap. I'm, of course, joined by my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, it's good to be here. We're rolling into the end of August.
We are rolling into the end of August, and I'm noticing right now on the screen it's a little bit darker than normal, which is because we have rain. Yay! So that's pretty exciting. And you said you have a bit of rain out in Kelowna too, right?
Yeah, it's been kind of off and on, which is great. It helps, certainly helps the forest fire situation a ton.
Absolutely. I feel like fall turned on overnight. Looking forward to a wet fall so that we can recover a little bit in BC from what happened this summer. Let's talk about this week. There's some stuff, big stuff happening. We're going to talk about the breadth improving in the market. You're going to tell us what that means and what's going on. We're going to talk about the JPOW Summit. For those of you who don't know, because I didn't know this morning, that is the Jackson Hole Economic Symposium. It's an annual event. This year they had to very quickly turn around from an in-person event to virtual because of COVID concerns. And it's happening right now, but you're going to tell us what we know so far about what's going on there. We're going to talk about National Bank. They are the first big bank to come out and offer zero commissions alongside, other companies such as Wealthsimple and Robinhood. We're going to talk about that. And then, of course, we're going to get into some CSE issuer news and a celebrity sighting. Okay, so tell us about the breadth improving. What does that mean?
Yeah, I mean, this has obviously been a theme that we've talked about on and off over the last few really weeks and months, in that, if you kind of look at back in February, we saw things, really exuberant from a market perspective. And since then, we've seen the indices continue to click higher, but a lot of stocks under the surface haven't been hitting new highs. And in reality, they've actually been dropping down. We've started to see that recover now, which is a good sign. So what we've started to see is the mid caps reaccelerate here, which is usually how it goes. You get the big caps, and then investors start to look for the next opportunity, which is kind of the mid caps, and then it moves down to the small caps. If we have broad breadth, that's typically when the markets are going to head higher, as opposed to very narrow breadth. And so we've started to see the mid caps now starting to turn up. We're starting to see the number of stocks above their 50-day moving average, and then also the number of stocks above their 200-day moving average starting to move up. So if you look at the chart of the RRG that's on here right now, this is just showing you that the mid cap, which is in the blue there, is starting to head up, and it's heading into the improving quadrant, while the TSX is over in the is in a leading quadrant right now, and the small caps haven't started to move up yet, but obviously it usually is a transition from large to mid to small, and so we're expecting to see that kind of as time progresses here.
Well, that's a good sign for us, and we also know that going into fall, things usually ramp up a little bit. Is that what your expectation is this fall?
Well, if the one thing is that we tend to see volume, the volume tends to get thin in the summer, and that certainly has been the case. I think a lot of people, after being cooped up at home for close to 18 months, have decided, okay, I'm going to get away, and when I do, I'm just putting my phone on do not disturb and putting the out of office on my email, and I'm gone. And a lot of people have been used to being on all the time, and I think that everyone's burned out from COVID. And so I think there's a lot of people away from their desks right now. And the anticipation is that, some will come back next week, but the following week, you should see, a fair number of people back at their desks again, and volume will pick up. And then, obviously from there, we'll really determine, sort of what direction things go. And that's obviously the challenge, and that's the game. And the puzzle that all investors are always trying to put together is, where are things going economically, earnings wise, and where does that, lead stock prices?
Absolutely. Well, and I'm sure for investment managers such as yourself, it's been such a busy year and a half. There's a little burnout, but you got to keep going, right?
That's right. Unfortunately, there's not a lot of time where the play's not happening. It always seems to be going. So Monday to Friday, that's the ball's in the court.
That's right. Except for Fridays when you hang out with me, it's like a vacation day.
Well, just for a few hours, yeah.
Just for a few hours. Okay, let's talk about the Jackson Hole Economic Symposium. So again, as I mentioned, this was very not that long ago, I think it was last Friday, they announced that this would be a virtual event. Obviously, in the US, they are struggling with, further outbreaks of COVID. The Delta variant seems to be pretty rampant. I did read somewhere about 80% of COVID cases currently are the Delta variant. And so obviously, for obvious reasons, they decided to move this to a virtual event. I do have to say, it is a little unfortunate. I know as part of, my general work, being in a room with people is incredibly helpful in making business happen. It is too bad that these conversations cannot be happening in person. The virtual experience is just not quite the same. But why don't you tell us a little bit about what is intended to go on there, or what we know so far?
Yeah, so this is something that the Fed does every year. They get obviously all the Fed members, but they get a lot of other influential business people together, and they have virtual meeting, or not virtual meetings. They have large group meetings, and they have some breakout meetings that happen. But the first part of the agenda is obviously when the chairman of the Federal Reserve comes in and sort of gives his address. And this is one that's been kind of much anticipated. There's been if you sort of look at what the different members of the Federal Reserve Board, some of the presidents from the different regional feds have been saying, there seems to be a real jockeying back and forth about what they were going to do. Were they going to, cut the taper now? Were they going to gradually cut the taper? When would they be changing interest rates? And so Jerome Powell, JPOW, as we put in the title here, came out and basically said, yeah, we're going to be looking at tapering. So right now they're buying about $120 billion worth of bonds and assets and mortgages per month. And he said that they're going to start tapering presumably sometime in the fall to later this year. And they're going to take it slow. So, if they are at that 120 and, sort of cut back maybe 10 billion, only 10 billion per month, then, that's going to take a while before, it's fully off. So that kind of puts probably, October-ish, November next year before all the taper's finished. And then at that point in time, then they probably talk about increasing interest rates. So the market like that, we see a day today where, markets are at, again, all-time new highs. We're seeing recovery in, again, the small caps. So the Russell 2000 in the US has moved up quite a bit. And I think that's just because, the market really didn't want to see a quick move here. And if you go back and sort of look at the history, when the Fed has surprised the market on rate increases and in some cases, tapering quicker than the market anticipated, it does have a negative effect. And, it's kind of referred to as this taper tantrum. And, the last time was, you go back to December 2018 when, Jerome Powell had announced that, they were going to change interest rates, and then, the market sold off hard. And then in January 2019, he came out and said, and reversed his decision on that. And the markets took off until basically March of 2020. So that was the big news from that standpoint. And obviously the markets like all that stimulus heading into the market.
Right. And so just to clarify, because we talked about this, I believe last week, tapering is the slowdown of accumulation of assets on the books, on the balance sheet. And those assets are typically bonds, correct?
That's right. So they're buying between bonds and mortgages. They're buying $120 billion per month. And I think in the last year, they've spent about 22 trillion, I think is the number. And that's providing liquidity to the market. So they're effectively buying those bonds in the market. And if you think about it, you held that mortgage or you held that bond, now all of a sudden you have cash and you need to figure out what to do with that. And you put it somewhere else. If that's another bond, if that's the equity markets, if that's real estate, but you get that cash in your hands because the Fed's bought it off of you.
Oh, well, thank you for explaining that. That makes sense to me now. So when they're tapering it off, it is a sign of them reducing the stimulus and kind of letting the economy, do its thing on its own, I guess. And that makes sense. So there's less cash being, spun into the market itself. Okay, let's talk about National Bank. So National Bank is a Canadian-owned bank. It is the first big bank to come out alongside, what we've seen Wealthsimple and Robinhood do. Robinhood obviously being the U.S. Discount brokerage that's zero commissions, and Wealthsimple being the Canadian version. They're the first ones to come out and say that they will offer zero commissions. There's also no minimum on what you can purchase to get this zero commission. This is putting them as a big competitor in the marketplace. What do you think about this?
Yeah, I mean, it was probably not too surprising to expect that it would come one day, especially given that the competition that they have is already doing that. But, they were obviously the first bank to make that move. They're not the biggest from an online trading platform, from what I understand. I think TD's platform is still significantly bigger. But obviously, at some point in time, you would expect that the other banks are going to have to match and move down to that zero commission as well. And so it'll obviously have an impact on commissions and trading with some of the other banks and how that affects their earnings. And then obviously the bigger thing at play there is what it does for commission rates and for trading. At one point in time, commissions were sort of that barrier in a lot of people's minds to why they would execute or why they would day trade or trade on a more frequent basis. And now if you're not paying anything to trade, probably makes sense that you can transact a lot more than you did before.
Well, so I remember when I started in the brokerage world, it was probably 2001, and commissions were, if it was a big trade, commissions could be as high as, $1,000 or in the thousands of dollars for a commission. Obviously, we didn't have access to this. I kind of wonder, just from a trading perspective, the analogy is this like going to a buffet? Like all of a sudden you'll be able to do whatever you want, whenever you want it, and there's no repercussions of trading. I wonder, is this a good thing for retail traders?
Well, it probably depends on what kind of process and systems you have in place. Over trading can cost you a lot of money if you just think about simply the transaction impact costs of trading. It's not free. So, if you're even across the bid-ask spread on a big enough size, then that can cost money in itself. But then you take into account if people are making decisions because they think they're not paying any commission and that decision isn't right, then obviously you can get hurt as well. The analogy is it's not timing the market, it's time in the market. That's not a view that we 100% adhere to. Certainly at StoneCastle, we think that there is a certain amount of timing that can be done. That being said, we're not day traders here, so when we're jumping in and out, it's not on a daily basis, and commissions are not that impactful to our business either. But certainly that really frees things up for investors, and if you have a good process and a good discipline, and you're able to trade, now you don't have to pay anything to trade, and you can make that much more money. It goes right into your pocket.
Yeah, I don't know. It'll be interesting. I'm a big believer in going to professionals who have who do this every day and have due diligence practices and education and experience, such as yourself and StoneCastle. But it'll be interesting. I do relate it to the buffet that people will have, instead of asset allocation, they'll have plates with prawns and cheesecake and soup. So anyway, make sure that you're creating a due diligence program if you are trading for yourself, or go seek professional help, please. Okay, let's talk about CSE issuer news, my favorite part of the show. We have a few things that happened this week and one celebrity sighting, but we're going to start off with a company called RIV Capital. So I'm going to try and explain what happened with RIV Capital. They are going to be an issuer on the CSE, or they are an issuer on the CSE. Welcome, RIV. So here's what happened. Okay, so RIV Capital was originally the spinout from Canopy. It was called Canopy Rivers, and they trade on the TSX. Now, on the TSX, you cannot be involved in plant-touching business in the U.S. because it is still coined as federally illegal, although it is legal in statewide. And so what they've done is they're making a move over to the CSE. So welcome. We're happy to have you guys here. The CSE took the stance that if it is legal within the jurisdiction of operation, that we would go on that basis. So what they've done, which is quite interesting, I wonder if we're going to see more of this. There's a company on the New York Stock Exchange called Scott's Miracle Grow. Scott's Miracle Grow is traded on the New York Stock Exchange and under the same binding that it cannot be involved in plant touching activities. Cannabis plant touching, not other plant touching. And they have a company, Hawthorne Gardening, which is a leader in indoor hydroponics. So I think what happened is they're missing out on a great opportunity if they're able to provide the hydroponics, but not do the vertical integration that we keep hearing about in the US. What they've done is they've created a subsidiary called Hawthorne Collective. and they've invested 150 million into RIV Capital, the public company. It is, sorry, not invested, it's a convertible note, so it can be converted in the future. RIV moves to the CSC, and now all of a sudden, both companies can participate in the wonderful US cannabis space. What do you think of this?
Yeah, I mean, it's obviously an interesting move. Hawthorne's is a big division. You know, they have, you know, fertilizers, lights, hydroponics, and you know, they really have a fairly big share. And obviously, this is a move to get them into to a whole new vertical and a way for them to expand as well. Interestingly enough, you know, the RIV, on the RIV side of things, I was reading a research report out by one of the analysts that covers the stock, and he was talking about the fact now that the stock's trading for less than the cash value that they have on hand, which is, you know, fairly rare that you would see something like that. So I suspect that they're going to, you know, go out and invest some of that cash, and you know, they have in the past certainly been fairly astute and well connected, you know, with their canopy connection, plus some of the brain power that they brought over from the street when they started. They should have, you know, access to see really every imaginable deal that's out there, and then some, with the fact they have this big piggy bank of capital to go invest.
Well, and the capital, not only that, I thought it was interesting that they are one of the largest providers of hydroponics in the US. So they probably have a book, a ledger of all of the people that they, you know, intend to get into business with, or possible ventures. So I'm sure that 150 million will be spent very well.
Yeah, for sure. They'll have tons of opportunity, you know, to see everything. You know, obviously their investment team at RIV will have to, you know, sort of sort through and figure out, you know, what's quality and what's not.
They'll have to get into the weeds, Bruce.
That's right. No pun intended, or maybe it was intended. Yeah.
Okay, we're going to talk about another CSE issuer. Silo Wellness announced on August 25th that they announced an amalgamation with a CSE issuer called Eucaterra Resources that is listed on the CSE. Silo Wellness, they've been around since 2018. They are in the functional mushroom space, as well as wellness retreats, psychedelic wellness retreats. So just to clarify what a functional mushroom is, a functional mushroom does not have any psychoactive elements to it, but it's definitely exploding on the market as an opportunity. I looked up the products, and the products have everything to do with digestion and brain power and restfulness. You know, I think they attribute it to many things similar to what we saw on the CBD side. So Silo Wellness, welcome. You will be joining us. And one of their big products is the Marley One brand. This is our celebrity sighting this week. The Marley One brand is obviously created by the Bob Marley family, and it's all functional mushrooms. It's also interesting to see that they have these wellness retreats. So just to explain that for a minute, these are retreats that will occur in jurisdictions that are legal for psychedelic mushrooms, where people can go, you know, on just like a yoga retreat, except for you go and you do psychedelics. And I'm sure there's a bunch of wellness just around that, not just the psychedelics. So I think we're going to start seeing more of this. Have you looked into the functional mushroom space at all yet?
Well, certainly there's a lot of companies around. I mean, one of the challenges that we've found is that, you know, a lot of them are pre-revenue. And so, you know, we haven't invested in a lot because we've been waiting to see, you know, how their business transpires. But obviously the sector itself is fairly significant from a supplement standpoint. You know, the supplement business in, you know, North America is gigantic. And this is, you know, kind of that new niche. It's, you know, something that everyone's talking about, and you see it included in a lot more, you know, supplements, either as an ingredient or a supplement as itself. So it is something that we have our eye on. We haven't done a lot as far as investing hard cash yet, though.
Right. Well, we'll see how, and I think that's a really good point that, you know, these emerging markets, they're still in their infancy stage, but we definitely are seeing a lot of this functional discussion around functional mushroom. One of the big reasons functional mushrooms is one of the big dialogues happening is because it's one of the only legal elements to this whole psychedelic frenzy that we're seeing come to market. I think the Marley One brand is probably globally one of the bigger functional mushroom brands. So that's pretty exciting. And I see that that there was a bunch of press releases out this week. They're getting into the UK market. They're kind of globally going around with the Marley One brand. So congratulations to them. Bruce, what should we think about going into next week?
Well, the big thing that we're watching is to see if there's a continuation here. We talked about, the breadth improvement and the, mid cap improvement. We want to see if there's going to be any type of follow through. So to see if the behavior of the underlying market is actually shifting, or if this was just a, false start. So that's what we're going to be watching for. If we see that follow through, then, it could mean stronger things into the fall for the markets.
Yeah, absolutely. It's also the last week of summer break.
It is, yeah.
So keep that in mind. The kids all leave shortly after that, so it'll be celebration. Anyway, thank you so much, Bruce. Thank you for joining me. As always, it's a pleasure, and look forward to chatting with you next week.
Yeah, see you next week.
Sounds good.